Steve, what might investors be reading into the difference between Tesla's equity and bond prices?
Tesla remains a core holding in what I would call a group of faith-based stocks. And that is their shareholders remain convinced in the benefits of the company and its leadership. And there's a small group of those companies, and they tend to be very highly valued. And I would include Amazon in that group. I would include Netflix in that group. And the one thing that you see all in common are very high stock prices, very high valuations. And in Tesla specifically, there's almost a messianic viewpoint among a lot of its core investors, and with good reason, because a lot of them have made a lot of money by holding this for a long time. I do know people who've bought Teslas with the money they made by owning Tesla stock. So a lot of that loyalty is well earned. But let's take this from a more neutral point of view and today's point of view, past performance being behind us. The most recent catalyst to the stock was the announcement of them building a major factory. Plans to build a major factory in Shanghai. The question that came to a lot of people's mind is, how are they going to pay for this? The problem that Tesla has is it is a huge cash-burning operation. That we can argue about the profitability and the ability to produce cars at whatever rate Musk is aiming for at any point. But the bottom line is, they still consume a lot of cash, and they don't bring in a lot of cash. They're a negative cash flow situation on balance. And if you're going to build a new plant, that is yet another negative cash flow event that would need to be financed. So the question is, what are they going to do to finance this? Regardless of the current factory, let's take a look at the relative valuation between the stock and the bonds. I looked up the Tesla non-convertible debt earlier, and it's trading at about $88 a bond. That's 88% of par, 88 being the quotation in hundreds, but it would probably cost you 10 times that to actually buy the bond. But so what that's telling you is that bondholders tend to have a much less rosy view of Tesla than the stockholders. And that is an interesting discrepancy and potentially an arbitrage. It's a very difficult arbitrage to capture, but one that really you need to consider if you're going to be investing in Tesla shares. Let's walk this back. Bond investors really only care about one thing: do I get paid? It's very binary. You could reinvent the wheel. You could have a perpetual motion machine. But if you've got the bonds in that company, all you really care is, I've lent you the money. Do I get it back on time with interest? And what Tesla's bonds are telling you is that bond investors who care about that one thing are somewhat concerned about that. It's not trading, let's say, at distress levels right now, but they're telling you that we're demanding a fairly big haircut to buy the bonds. These bonds yield 5% coupon, which in this environment is a very generous one, but yet it's still trading below par. If you held these out on a yield to maturity basis, that's roughly a 7% compounded yield. Now, if you're a Tesla stock investor, you're going to say, why do I want to be bothered with 7% compounded return when I can be making 20, 50, 100%? And that's really where it comes in. There's such a difference in perceptions right now. The stock investors are thinking toward this great, bright future, with unlimited potential for the stock price. Bond investors, who are very much rooted in, am I going to get paid now and when, are thinking there's some real risk here in whether I get paid back. So my question to a would-be Tesla investor would be, if faced with the choice between buying a bond and buying a stock, why would you not look to the bond first? If you're a true believer in the company, before anything else happens, they have to be able to pay back their creditors. And here's the flip side of it. From a risk point of view, if the bondholders don't get paid, your stock is worthless, or essentially worthless. And bonds actually rarely go to zero because there's plant and equipment and other hard assets that can be used to back the bonds. So I'm not making an investment call on Tesla here. What I am saying is if you're willing to buy the stock, think about why the bondholders are putting a discount on it. Perhaps you should be considering buying the bonds if you're a true believer in the company. Perhaps you should be buying the bonds, and one strategy could be buying the bonds and buying puts against it, figuring that if the bonds are going down, the stocks are going to go down worse, and you can possibly hedge it. The market is kind of hip to that. There is a big skew on very out of the money Tesla puts, partially for that reason. But this is the kind of calculus you need to make. When the bond market and the stock market are telling you two very different things, you really need to figure out who's right and why, who's wrong and why. And if there's a true discrepancy, then it's a great trading opportunity. If not, there's a real red flag out there. And I'll leave that for everybody to make their own decision.